The euro snapped a 5-day losing streak today, rising against the dollar on optimism the recovery is moving ahead. But the fiscal situation in Greece is prompting questions on the fate of the 16-nation currency. Nick Bennenbroek is head of currency strategy at Wells Fargo Bank. Welcome, Nick. Thank you for joining us today.
Good afternoon.
Okay, so I was talking to Tom Keene, host of Surveillance on Bloomberg Radio, and he said, you know, if you look at the euro regaining today and the Greek bond yields coming down a little bit, you've got breathing room. That's how he characterized it. How do you characterize the relationship of the Greek concerns of the last year and how they're playing out in currencies?
Sure.
Week.
I definitely think the last week, even the last year, for example, there's definitely been a close correlation between the budget concerns that we've seen in Europe and with the performance of the euro. When the concerns have been high, the euro's been struggling. When the concerns have eased a little bit, like they have today, for example, the euro's done a little bit better. And I think we are seeing a brief pause and some relief from the headlines that we've seen recently.
Now, the euro-dollar is up to 137.58. That's an over 1% climb for the euro just today. But you're saying that's just a brief pause?
I think it probably is going to be brief, and these whole European developments, these Greek developments, remain incredibly fast-moving. And one of the headlines that came across the screens today, Greece has been asked to provide more details regarding its currency swap transactions by the end of this week, by Friday, for example. So it may be that the pause or the breather that we get is only a couple of days. But certainly, given how far and how fast the euro has fallen, you're always going to get corrections along these lines.
How damaging or not will this information by Greece on those swaps potentially be?
It's hard to necessarily, it's difficult to say ahead of time, and we're not even sure to what extent the information will be fully available this Friday, for example. It's hard to imagine that it's necessarily going to be good news, though. I mean, certainly when the news about the currency swaps come out in the last couple of days, it's just thrown another sort of angle into an already very complex and very volatile situation. So I don't imagine that we'll see positive euro reaction to that news.
Positive
euro.
Okay.
I don't imagine that we will see a positive reaction when the news regarding the swaps comes out.
And then the long-term debate on euro will it be in existence a year from now?
Oh, well, a year from now for sure. And I mean, the euro will be in existence for a good 10 years. I would be very surprised if any of the 16 countries were to participate. I mean, I think the euro will exist, just whether its reputation is perhaps going to be quite as favourable as perhaps it looked during 2009. That's a completely different question.
How will this debt crisis stemming in Greece right now, but obviously there's the issue and the potential for contagion, shake up the currency relationships in Europe and around it here, even to the U.S.?
Well, it's a good question, and I think you're seeing some changes in the relationship. What we had seen, for example, was that the euro had been moving very closely with some of the other currencies, Australian, New Zealand dollars. All of these currencies had been moving up and down together, for example. We're seeing a little bit of a decoupling now, though. The euro is still very weak because of its budget concerns per se, but we're seeing some of the other countries proving to be more resilient. So Australia, Canada, New Zealand are just performing a little better than Europe right now.
And then as far as the dollar's role as a safe haven, it's really become even more pronounced, wouldn't you say, in the wake of this European debt crisis?
I would say that, and certainly there was question marks during 2009. Was the dollar losing its global reserve status? We believe most of the weakness in 2009 was related to liquidity trends or what the central banks were doing, not overall long-term concerns about the budget. And the recent developments would tend to support that. And we believe the dollar is going to remain safe haven currency for a time.
And especially with the Federal Reserve, as many people are expecting this year to finally raise at least what's considered the benchmark now, the Fed funds rate.
Yeah, I think towards the end of the year, certainly our house view is that by the end of the year, we'll be looking at Federal Reserve rate increases. And of course, there could be other policy moves ahead of that.
Now, I want to get back to this issue with Greece, because the other deadline, in addition to the swaps info by the end of the week, the EU has given it a month to, in a sense, get its financial house in order. Do you think that's a realistic goal to do that? I mean, will Greece be able to come to the table and say, okay, this is what we're going to do, our budgetary problems are behind us?
Well, I don't know about getting the whole house in order, but at least a couple of rooms, perhaps, in terms of getting some of it cleaned up. But
Good
I think,
analogy.
I think the key is that the European finance ministers earlier this week, they said we want to see more from Greece in terms of further budget cutting measures. And the figure that's being talked about now is a 4% reduction in the deficit relative to GDP. In 2009, it was 12.7%. So we are looking for substantial measures, and that's probably going to be the next critical, one of the next critical events for the euro. Has Greece made progress, or is it going to be sort of dissatisfying for some of those European officials come mid-March?
Do you look at this from a currency perspective, from an even larger perspective? Obviously, we had the questions out of Abu Dhabi and Dubai You know, and is there a link between what happened there and what we're seeing in Europe? And then could the contagion then spread west to the U.S.?
Most probably not. I mean, our view is that actually what we're seeing here is kind of the U.S. went through this pain in terms of the mortgage crisis and the subprime crisis. And certainly what we're seeing with Dubai and now in parts of Europe, for example, is kind of the ripple effects of that whole global crisis that occurred. It's the follow-on effects of the previous crisis. It's not the start of a new crisis, for example. So we think the U.S. has probably been through its troubles already.
Oh, well, that's good news for the U.S. I want to talk China while we have you here, Nick. Probably heard the reports, Goldman Sachs chief economist Jim O'Neill believing that China may soon let its currency, the yuan, appreciate. Seems to have been hearing that for a long time, though. There's been so much buzz and so much pressure on China from the global community to let that yuan appreciate, to make China more competitive, right, in the global trade situation. So what are you hearing about that, and what is your take?
Well, I think that clearly we believe a change to renewed currency appreciation, renminbi appreciation is coming, though we don't believe it's imminent. Certainly there's been some change in rhetoric from central bankers and politicians from China since late last year. But we're probably looking more at a mid-2010 event in terms of renewed currency appreciation.
And the implications of an appreciated Chinese currency. I'm sorry, you know, the three-day weekend, Nick, just leaves my brain kind of like stew. Appreciate it. So what are some of the implications there? Does China cool its overheating economy? Could this help on that front? Because we know China's been tightening its lending spigot of late.
Well, China's always very important for the emerging currencies and even some of the commodity currencies. Right now we're seeing 2 positives and 1 negative for those currencies from China. The 2 positives, of course, the economy is doing extremely well. And I think if China was to loosen the reins on its currencies, that would also help some of the other Asian currencies go stronger. The main negative is that in addition to currency strength or currency appreciation, we might also see some monetary tightening in terms of less lending, interest rate increases as well, and that probably wouldn't be so good for growth. But 2 wrongs and I mean 2 rights, 1 wrong. I think overall good news for some of those Asian countries.
And you know, my last question to you always is, all right, so as a currency strategist, what's your advice? What's the best position here in foreign exchange with your bets?
Most probably would be saying sell rallies on some of the major currencies. So if we get any strength in euro, yen, and the British pound, for example, and probably moves close to 140 for say the euro. Say, for example, in the pound, maybe towards the mid to high 150s, be looking to sell those rallies in foreign currencies and buy the dollar on dips, obviously.
Appreciate it. Nick Bennenbroek, the head of currency strategy with Wells Fargo Bank.